a very important question asked by many traders. What market should they trade? Now, we can categorize markets into 7 categories, okay? We've got the stock market and Forex, we've got options and futures, we've got CFDs, ETFs, and cryptos. Now, when I started trading in 2011, traders were mostly trading Forex or stocks, okay? If you were to look at the whole world of sort of retail traders, it was Forex and stocks. Why? Well, because the barriers to entry were very low, and the available education for retail was either Forex or stocks. Okay, that's what retail traders did. They did Forex or stocks, and that's what they did. Okay, it was cheap and it was easy to get going with Forex or stocks. You simply opened a brokerage account, you put $1,000 in your account, and in no time you're trading. Okay, commissions were quite competitive. Why? Well, because there were many brokerages that were offering brokerage solutions for Forex and stocks. So it seemed like the logical choice. If everyone's doing it, you should do it, right? That was 2011. Now, back then, no one really traded options because guess what? They were complicated and confusing. And no one traded futures because you needed an account balance of $20,000. Execution software was hellishly expensive. And typically futures were for hedging, not speculating. Okay, the big banks were using futures to hedge their positions. That's traditionally what futures were for. If we look at CFDs and ETFs, okay, they were niche products then. There was, sure, they were available, but they were niche. They were kind of like, you know, for that really smart person who's all studied up, who kind of understands the benefits of the products and how they can, you know, apply them as a strategy, okay? And obviously crypto hadn't yet been invented. Now, if we fast forward to 2023, professional traders are either trading liquid stocks or futures. And there's very good reasons for this, and I'll cover those in a moment. I'll tell you exactly why professional traders are either trading liquid stocks or futures, okay? Now, don't get me wrong. There is still a lot of retail traders trading Forex, okay? But professional traders are choosing futures and stocks, okay? And that's the key. There'll always be lots of traders that are kind of behind the curve. They'll trade what's readily available, what's easy, and what, you know, perhaps, you know, they come across on YouTube or whatever. But the reality is professional traders don't trade Forex. They trade either futures or they trade stocks. Now, when determining what markets to trade, there's 6 factors that I'll typically consider. So if I'm sitting with a trader, these are the 6 factors I really want to go through with a trader and understand in order to say, well, look, very clearly, these are the markets you should be trading. And the first is available resources. How much capital and time do you have? Okay, so how much money and time do you intend to trade with? It'll ultimately determine your style, it'll determine your strategy, and it'll ultimately direct you as to which markets to trade. If you're going to plan to swing trade with very wide stops, then guess what? Stock market, Forex, ETFs, CFDs, they all make sense, okay? Less time means you cannot watch data in real time, and therefore leverage positions or volatile products won't be suitable for you, okay? However, if you're committing more time to this and it's your primary income, so you're doing this as a full-time job, then you need to take advantage of the leverage and volatility that comes with the futures in the stock market. Okay, so it all comes down to number 1, what is your available resources? Next, brokerage availability. Okay, now there are hundreds, if not thousands, of brokerages you can choose from. All of them are cost effective nowadays. Okay, however, there are some brokerages that offer all products, right? So they offer everything: ETFs, crypto, you know, Forex, futures, and ultimately you then get brokerages that only offer specific markets. Now, you as a trader have to ensure you're putting your money with a brokerage that provides a degree of certainty that you'll still be in business tomorrow, okay? Cheap is expensive. Remember that. If a brokerage is offering you cheap commissions and high leverage, run far, far away. A brokerage is a relationship that you have to establish over time, okay? Some brokerages offer multi-market offerings and some offer single market offerings. Now, the important thing to note is that it sounds like a good idea to go with a brokerage that offers all the markets, because then, hey, maybe one day I can put on that crypto trade or I can put on that ETF trade, right? But the benefits of choosing a single market brokerage is that they're only investing heavily in specific infrastructure, including risk management, that they can manage thousands of traders. Okay, so think about it. When you're trading multiple products as a brokerage, you've got to be investing your money in loads of different areas to manage all the different products you're making available. Okay, and this is very, very important determinant. If you're going to be trading crypto, leaving your funds, for example, with an unregulated brokerage, don't be shocked one day if you wake up and your funds are frozen. Okay, so very, very important. Look at the brokerage availability when determining what markets you're going to trade. Okay, opportunity scope. The more trade opportunities available to you, the faster you'll learn, the faster you'll get your drawdowns back, the faster you can build an account. Okay, that goes without saying. Now, the reason so many traders have moved away from Forex in the past years is because opportunities have dried up. When central banks all adopted zero interest rates, volatility dried up and Forex markets did nothing for a number of years. Now, if nothing moves, there's no opportunity to profit. So choose a market that offers you a number of tradable opportunities over the year. Okay, costs. Software and commission, right? The fixed cost of trading is very, very important to consider when choosing your product. If you're trading ETFs, okay, the commissions are high and the spreads are wide. Also, if you've ever tried to get out of an ETF when volatility is high, you'll realize that the spread becomes non-existent. You can't get out, okay? If you're trading options, you're paying up large chunks of premium and you have a low win rate. If you're trading futures, you get free execution platforms, but commissions can obviously add up over time. Right? Some markets will be cheaper than others, but you need to consider the cost of entering trades against the upside. What do I mean by this? And this is crucial. If you're trading futures, for example, and you enter with a one lot in the S&P 500, every single one price that market moves is $12.50 in your favor. Okay, the commission for entering that trade is $2.60. Okay, in other words, you don't even have to make one tick to cover your cost of that trade. It's cheap. Now, if I was to go and buy 100 shares with one of my brokerages, I'll pay $8 for entering that. In other words, I need the market to first move 8 cents in my favor before I cover the cost of entry. Okay. If you look at Bitcoin, this is crazy expensive. Okay. If you're trading Bitcoin, you will know fine well the mining fees involved are huge. And not only that, but there's also a massive bid-ask spread. Okay. So the market will need to move a lot before you break even if you're trading Bitcoin. You've got to factor in these costs of trading when choosing your market. Don't be blind to them. Don't be sucked into this idea of just because the guy posted a cool Twitter chart on, Bitcoin or Ethereum that you can make lots of money. Okay, the cost involved with trading a market is extremely important. Okay, futures investment or investment and development, and this is really key, and not many people talk about this because it's often overlooked. Right? If you look currently in the trading industry, which markets are companies spending money investing in? In other words, what education is currently being developed? What trading solutions are being developed? Which tools are being built? And which markets are they being built for? Where's the money being invested? This is where you want to be trading, because this is where all the traders will be trading in the future. If there's premium education for futures, why would you want to trade crypto? If there are tools built for options, why do you want to bother with Forex? Go where the money is being invested. Finally, professional community. Where are the professional traders trading? Okay, the best due diligence you can ever do, right, is just look where real money is being made and go there. I know it sounds simplified, but this is probably the easiest way to determine what markets to trade. Okay, I know a number of prop trading futures offices in Europe that house very successful 7-figure traders. Okay, I haven't yet heard of a successful prop house, housing 7-figure crypto traders year over year. Okay, I just haven't heard of one, and I may be wrong, but I haven't heard of it. Okay, go where the professionals are trading. Now, at the beginning of this topic, I told you I'd outline why professional traders nowadays choose futures and Forex. Futures and stocks. Okay, it's very simple. There are a number of experienced trading teams in global cities. Okay, a number of prop houses in global cities that trade these two products. Okay, the new innovations, the new trading tools, the new charting platforms, the new, even if you look at the current futures funding programs, all of it is being developed for futures and equities traders. Okay, the quality education is being developed primarily for futures and stock trading. Okay, futures and stock trading is now more accessible than it's ever been before. Right now, you've got micro contracts. You can trade futures with just $500 accounts. You can, get leverage on stock trading. You can use your stocks for margin. Right? They've really innovated the space for futures and stock trading. That is now the reason why why traders are navigating towards futures and stock trading. Okay, the barriers to entry are very, very low, and most important, there's a significant amount of opportunities in futures and stock trading. Okay, I have heard of a number of traders moving away from Forex and CFDs. Okay, and crypto. Very often, I come across them. They reach out and say, "Hey, I've been trading Forex. What would you advise?" But I've never, ever heard, ever in my single career, I've never heard of a single trader telling me they're moving from futures or stocks towards Forex, CFDs, and crypto. Okay, that's the truth. That's the reality. Go where the professional traders are going.